This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. I'm John.
And I'm Mary. It is Friday, June 26th, 2026. We are your smart friends on the go.
Let's start with the gist view. Over in Colombia, far-right candidate Abelardo de la Espriella just won the presidential runoff. He defeated left-wing Senator Iván Cepeda on Sunday.
Right after the win, financial markets cheered. Traders called it the Tiger Trade. That is a nod to the new president's nickname. But that enthusiasm is already fading fast.
It proves a core rule of global finance. Bond markets are ruthlessly indifferent to ideology. They only care about cold, hard math.
Think of sovereign bond investors as the ultimate reality check. These are the institutions buying a country's debt. They lend the money, so they hold the leverage.
Exactly. Right now, creditors are demanding concrete plans to fix Colombia's public finances. If a country wants to keep borrowing money, investors need to know how they will get paid back.
The fascinating part is the timeline. De la Espriella doesn't even take office until August 7th. He hasn't even named an economic team. Yet the market's honeymoon phase shrank to almost zero.
It shows us who really holds the power. Politicians can make massive campaign promises, but the moment the ballot counting stops, the national balance sheet takes over.
We saw the exact same immediate repricing back in 2022. That was when outgoing leftist President Gustavo Petro was elected. Left or right, creditors always demand to see the ledger.
Let's pivot to our global overview. In Saudi Arabia, the oil is flowing again at a major Gulf terminal.
This facility is run by Aramco. That is the state-owned oil and gas giant. The terminal had been shut down for nearly 4 months. Now, 2 massive supertankers are loading up crude oil.
That data comes from Kepler, a firm that tracks global commodity markets. They say a third ship is waiting in the wings. This is a big deal for global energy supplies.
It really is. We recently saw a lot of tension in the Strait of Hormuz, a critical shipping route. Pumping more oil into the market right now adds immediate relief. It helps keep global energy prices from spiking.
Moving down to South Africa, we are seeing a striking overlap between private wealth and state police.
Local businesses have pledged to give police drones and helicopters. The goal? To enforce the departure of undocumented migrants.
This isn't just a friendly donation. These businesses are directly subsidising the state's border enforcement, and they are aligning perfectly with a strict deadline set by domestic anti-immigrant groups.
It is a clear look at resource flows. When commercial entities fund police logistics, they act as an accelerator for state policy. Private money is stepping in to enforce political borders.
Let's bring it back home for the European perspective. The big story today is Volkswagen. It is a massive shockwave for German industry.
VW CEO Oliver Blume is reportedly planning to cut 100,000 jobs by 2030. That doubles their previous target of 50,000.
The numbers explain why. In the first quarter of 2026, operating profit dropped over 14%. It fell to 2.46 billion euros.
To stop the bleeding, VW is proposing to spin off its core brand. They also plan to shut down 4 German factories. Plants in Hanover, Zwickau, Emden and Audi's Neckarsulm site are on the chopping block.
Here is the core insight. For decades, Volkswagen's massive size was its superpower. Now, in the shift to electric vehicles, that scale is a heavy anchor.
They are competing against Chinese EV makers. Those rivals are highly agile and structurally cheaper to run.
Europe has tried to use protectionist tariffs. Those are basically import taxes designed to shield legacy car makers. But taxes cannot hide a bloated balance sheet.
There is a heavy geopolitical cost here too. Shrinking domestic car production means Europe surrenders its industrial independence. Relying on foreign supply chains is incredibly risky in a fragmented world.
Speaking of systems under stress, Paris is dealing with a severe heat emergency. Temperatures just hit 40 degrees Celsius.
It got so bad that city emergency supplies simply ran out.
Alexandre Bompard, the CEO of the massive French retail chain Carrefour, had to step in. He donated 4 tons of ice directly to local firefighters. They desperately needed it to treat severe heatstroke victims. Think about that flow of resources. First responders having to rely on a grocery store's ice supply. It is physical proof that municipal safety nets are buckling under extreme climate events. Finally, a quick update from Ukraine. DTEK is the country's largest private power provider. Their CEO, Maxim Timchenko, says they are aggressively prepping the grid for winter.
They are applying harsh lessons from previous strikes on their infrastructure. It is a race to physically harden the power grid before the cold weather and the attacks return.
To wrap up today's temperature, global bond markets are ruthlessly policing political promises in South America. Corporate giants are funding border enforcement in Africa and bailing out emergency responders in Europe. Meanwhile, Germany's industrial crown jewel is shrinking just to survive. The overarching theme today? Private capital is aggressively stepping in wherever state capacity falls short.
That is the gist of it. Now, if you enjoyed having a smart friend keep you up to speed today, we would love for you to join our community. You can subscribe to The Gist's daily newsletter completely for free. Just click the link in our show notes. Have a great weekend, and we will catch you on Monday.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.